APTT was listed as a business trust on the Singapore Exchange in May 2013. Our sole asset today is Taiwan Broadband Communications, or TBC. TBC is a large cable operator in Taiwan that owns 100% of the hybrid fiber coaxial cable network in 5 closely clustered franchise areas in Taiwan, namely Taichung City, South Taoyuan, Hsinchu County, and North and South Miaoli. Through this advanced network, we deliver basic cable TV, premium digital cable TV, and high-speed fixed-line broadband services. And we have network coverage of more than 1.2 million homes. So just as a point of comparison, Singapore has just slightly more homes at roughly 1.37 million homes, so compared to our 1.2 million homes. The pay TV market in Taiwan is really dominated by the cable TV providers, and as a result, more than 2/3 of the homes in our franchise areas subscribe to at least one service from TBC. TBC has a strong relationship with its customers and enjoys good brand awareness in its markets. This is really the organic growth strategy of our business, to maintain and develop the monopolistic basic cable TV subscriber base, to serve as a platform for TBC to upsell premium digital cable TV content, and especially to cross-sell high-speed broadband and other value-added services. At the same time, we are aggressively marketing our fixed-line broadband to the remaining 1/3 of homes in our 5 franchise areas who are not currently our subscribers for either TV or broadband. I'll cover this in more detail later. Now let's turn to the next slide and we'll look at TBC's 5 franchise areas. Overall, our franchise areas have attractive population demographics. Many people are migrating into Taoyuan, which is in close proximity to Taipei, and Taichung City, which is one of the most populous cities in Taiwan. As you can see from the 2 charts on the right, the population growth and the number of households in our 5 franchise areas are higher than the national average. Disposable income in these 5 areas is also growing faster than the other markets. So what all this means is just that we're operating in a good market to upsell our services. Over the last few years, we have been aggressively targeting our wide cable TV subscriber base to steadily grow our number of premium digital and cable TV and broadband subscribers. And we'll also refer to subscribers as revenue generating units, or RGUs. And we're very focused on executing our broadband growth strategy, as this really is where the opportunity for growth lies. As compared to other developed APAC markets shown in this slide, the internet penetration and connection speed are the lowest in Taiwan. So this just means more opportunity for us to continue increasing our broadband penetration and our speed plans. So in our 5 franchise areas, there are 2 major players providing fixed line broadband services, ourselves and the national telco. We've been steadily winning market share from our primary competitor. And today, our broadband penetration is approximately 38%, compared to 35% and 33% in 2020 and 2019, respectively. So our strategy is to continue to churn customers our way and to grow our market share by offering higher speed plans at lower prices, as well as providing value-added solutions that leverage our Android gateway. Our broadband growth strategy is really important because the cable TV market in Taiwan has been well penetrated for many years and appears to have hit a saturation point. On the back of the availability of pirated content, aggressive competition from IPTV, and the shifting media consumption habits, cable TV will not be as dominant as in the past. So let's look at our business highlights for the quarter and the half year ended 30 June 2021. We're seeing continued strong performance from broadband. For 4 consecutive quarters, broadband net revenue, which includes revenue from data backhaul, improved in both Sing dollar terms and Taiwan dollar terms compared to the prior corresponding period, or PCP as we say. Particularly encouraging is that the second quarter, broadband recorded growth in not just the number of subscribers, but also ARPU. Our broadband performance validates the strength of TBC's growth strategy in driving our broadband business by intensifying marketing efforts that focus on the broadband-only segment, offering higher speed plans, and growing our data backhaul business. For the second quarter, we recorded revenue of $73.7 million, and EBITDA improved by 1.3% to $45.2 million, while EBITDA margin increased to 61.4% as we lowered our operating expenses and increased our higher margin broadband revenue. Capital expenditure has been trending down. It decreased by approximately 44% for the quarter and 40% for the half year. And going forward, we expect this trend to continue as we anticipate spending less on our network investments compared to the last 3 years. This is because TBC's fiber density has now reached a level that can comfortably deliver higher speed plans and support wireless operators in the build out of their 5G networks. So with this, we aim to use excess cash generated from operations to make debt repayments. On distribution, in line with our guidance, we have declared a distribution of 0.25 cents per unit for the second quarter of 2021. And for the full year 2021, the board has reaffirmed distribution guidance of 1 cent per unit to continue to be paid in quarterly installments of 0.25 cents per unit per quarter. We're targeting to release our 2022 distribution guidance when we release our next quarter's results for Q3 in around early November. So let's turn to slide 10 and we'll look at our key operating metrics. As I mentioned previously, broadband ARPU actually increased and improved by 3 NT dollars per month, alongside 9,000 more subscribers. So this really reflects the success of our broadband strategy. In recent months, we have been working hard to partner with wireless operators to offer fixed line broadband services to their customer base. So for example, if you walk into a TAIWAN mobile wireless shop, you can also subscribe to TBC's fixed line broadband. So these wireless operators really view our fixed line broadband as complementary. It's not competitive to their wireless product. So it's a value add to their customers, and the wireless operators are really happy to work with us. We've signed up 2 more wireless operators, and we'll be launching in their shops in Q4 this year. At the same time, we continue to convert our existing cable TV subscribers to also take on our broadband service. Over half of our cable TV subscribers currently don't use our broadband service, so really this continues to be a real opportunity for us. Our total broadband subscribers now stand at 264,000, and we're confident that this base will continue growing. For premium digital cable TV, continued growth led to subscribers increasing by 7,000 to 257,000. ARPU was slightly lower by 2 NT dollars per month, and this is because of promotions and discounts we give to bundles that we use really to compete with the pirated content and aggressively priced IPTV. So together, the increase in both premium digital cable TV and broadband subscribers more than offset the churn in basic cable TV. Basic cable TV subscribers declined by 0.7% or 5,000 to 698,000, while ARPU decreased by 9 NT dollars per month. Basic cable TV will continue to be under pressure due to the saturated cable TV market, as I noted earlier, because of video piracy, IPTV, and the growing popularity of online video. But notwithstanding this, we do expect basic cable TV in our 5 franchise areas and Taiwan more generally to be more resilient compared to other global markets, since subscribers can receive over 100 channels of the most popular content in Taiwan for the approximate equivalent of 23 Singapore dollars per month. So the Taiwanese cable TV subscriber really benefits from content-rich, inexpensive cable TV service. Overall, we expect our total subscriber base to continue growing, driven by broadband and premium digital TV. So let's turn to slide 11, and we'll see how these key operating metrics translate into the financial results. The results on this slide include revenue and operating expenses to arrive at EBITDA for the quarter ended 30 June 2021 and for the PCP. In constant Taiwan dollar terms, basic cable TV revenue for the quarter and half year decreased by 5.7% and 9.3% respectively due to the declining RGUs and lower revenue generated from channel leasing. Revenue for the half year was also lower due to the absence of one-off revenue arising from the sale of certain in-house content, which was recorded in Q1 2020, as well as lower revenue generated from advertising sales in Q1 2021. On premium digital cable TV, revenue for the quarter and half year declined by 5.1% and 2.6% respectively in constant Taiwan dollar terms. As mentioned, we are very pleased that revenue from broadband, where our growth lies, has been increasing for 4 consecutive quarters in both Sing dollar and NT dollar terms. For the quarter and half year, revenue in NT dollars improved by 7% and 6.7% respectively. So very reasonable growth at 7% for the year, and we're pleased to see that. Operating expenses for the quarter and half year were lower compared to the PCP, mainly due to lower staff costs and other operating expenses. And going forward, we'll continue to manage our operating expenses. Based on our projection, we expect total operating expenses in 2021 to be lower than 2020. Now let's turn to slide 12 and we'll look at our net profit. For the quarter and the half year, net profit is exceeding the level compared to the prior year. However, it should be noted that net profit is not necessarily the best indicator of our underlying performance, as it does include some non-cash items such as foreign exchange and deferred taxes that are mostly not expected to be realized. So a somewhat more helpful reflection of our performance is the level of EBITDA and other selected financial information as highlighted in the next slide. So if we look at that now, to manage APTT's business, it is helpful to review these key financial metrics as a gauge for net cash flows generated and the level of funds available to support distributions and borrowings. So we look at EBITDA, which is a proxy for cash flows from operations. And then we look at other cash items, including capital expenditure, income taxes, and financing costs. As you can see from this slide, and if you refer to the cash flow statement in APTT's financial statements, our cash flows for the quarter and the half year are stronger compared to the prior corresponding period. Let's turn to the next slide now, and we'll look at the balance sheet. The consolidated cash balance at 30 June was $133 million. A significant portion of cash does represent collections we receive in advance for our TV and broadband services. We also maintain cash balances to fund the daily cash requirements of our business, while a significant amount of cash has also been set aside for principal repayments on our borrowings for the rest of 2021. This is really a typical cable company balance sheet where the bulk of the value is reflected in intangible assets, whether it's licenses, goodwill, franchise rights, or customer relationships. As you can see, the recorded value of our intangible assets, which is mainly the cable TV licenses, at 30 June 2021 was $2.6 billion. We have separate licenses for each of our 5 franchise areas, and while these are due for renewal every 9 years, the process is administrative and the likelihood of renewal is very high. In 2020, we successfully renewed 2 licenses until 2029, And this year, for the remaining 3 licenses, we renewed those successfully until 2030. When it comes to physical assets recorded in property, plant, and equipment, we own 100% of the physical fiber coaxial network and the other fixed assets that we use to deliver cable TV and high-speed broadband in our franchise areas. We don't lease any portion of our physical network. The recorded value of our physical cable network and other assets was $313 million at 30 June 2021. And really, the other major component of the group's balance sheet is borrowing. So let's look at these on the next slide dedicated to borrowings. We're very focused on our debt management program. A key priority for us is to manage debt levels and to strengthen the balance sheet. As you may know, we reduced our borrowings by $45 million in 2020, our offshore borrowings, and that's helping us to save approximately $2.9 million in annual interest costs. In March of this year, we successfully extended the maturity date of the offshore borrowings by 2 years to July 2023, and on the same major terms. So, we're pleased with that, and this really demonstrates the lenders' vote of confidence in our business and in management. And it's a step forward in furthering our debt management program as we gradually reduce debt levels and strengthen the balance sheet. And discussions are already underway to refinance our onshore borrowing facilities ahead of maturity. And we're confident we'll successfully refinance the onshore facilities within the next 12 months with no impact on the distribution. Now let's turn to slide 16 and we'll look at capital expenditure. While we haven't guided to a specific number, since the level of capital expenditure really is something that can be managed and adjusted depending on the business landscape, we have guided that capital expenditure will continue to trend down. And we can really see it from this chart. For the half year 2021, capital expenditure as a percentage of revenue was 11%. This represents a 40% decrease compared to the prior year. As you can see from the chart, maintenance capital expenditure, which is really essential for the business to keep it running, is stable and will remain so. Our network investments, however, are projected to be lower compared to the last 3 years. It's not to say that we'll stop investing in our network. We really are future-proofing by continuing to invest, increasing our fiber density by bringing down the number of end homes per fiber node. However, our investments won't be at the same level as before. Overall, a range of approximately 10 to 18% of CapEx to revenue is considered normal in our industry. And most of the players right now are at around 13 to 15% CapEx to revenue. So far, year to date, we've brought down our CapEx level to 11% of revenue. This is certainly not guidance, but we will continue to manage CapEx carefully and invest within normal industry standards. Next, let's look at our outlook and our strategy. We're very focused on creating long-term value for APTT and our unit holders. With prudent capital expenditure management, we aim to further improve our balance sheet. This will enable us to navigate the competitive landscape more effectively and capitalize on the data backhaul opportunities presented by Taiwan's 5G rollout. We're also very focused on executing our broadband growth strategy. We believe there is still a lot of room to grow the number of our broadband subscribers and our market share. Let's just spend a minute and we'll look at the 5G data backhaul opportunity in a little more detail. So here's the backdrop you can see on this slide. Wireless operators have had to spend a lot on 5G spectrum, while at the same time, wireless competition in Taiwan is very intense. At this point, wireless operators' plans are still fluid, as it is in the early days, but they do have some regulatory commitments to meet, in terms of coverage and certain rollouts. But wireless operators will be prudent in the build out of their 5G networks. Given the landscape, they will need to plan their CapEx efficiently in terms of how the coverage can be reached and the equipment they need to deploy. In our 5 franchise areas, TBC is one of 2 players that owns a distributed and dense underground fiber optic network that could be leveraged in a 5G rollout. Most importantly, we don't compete in the wireless space, unlike the other player. So this is an attractive proposition for the wireless operators, being able to lease our fiber network for data backhaul versus building out their own or leasing from their competitor. This will be a way the wireless operators can efficiently plan out their networks. So we're working with them to ensure utilizing TBC's network is part of their planning process. Although its contribution is not yet significant, revenue from data backhaul over the last 2 years has been gradually increasing from a base of 0 in 2018. It's a business we've grown from the ground up, starting in 2019 and growing to be a 7-figure number in 2020. And we're confident that data backhaul revenue will continue growing and add a meaningful income stream to our broadband business within the next few years. Just a quick word on the next slide regarding the impact of COVID-19 before I finish with the outlook. So far, really, the impact of COVID on TBC and APTT has been limited due to the subscription-based nature of our business. While the outbreak in Taiwan has been relatively contained as compared to other countries, we will continue to exercise prudence by managing our operational and capital expenditure and by strengthening our balance sheet. Now let's move on to our outlook. Overall, we are positioning APTT to grow in a measured way. For 2021, while we do not expect basic cable TV RGU growth due to the saturated cable TV market, we do expect the number of premium digital cable TV and broadband subscribers to continue to increase and to outpace the churn in basic cable TV. Total revenue, though, will be influenced by the ability to maintain our ARPUs, which will remain under pressure due to market dynamics. The decline in the demand for home shopping and competition from internet retailing will continue to put pressure on channel leasing revenue for the cable industry. Operating expenses in 2021 are expected to be lower than 2020, and we'll continue to work hard in growing our subscriber base and further our new business initiatives to mitigate the impact of lower ARPUs. This is the end of the formal presentation